we've been going back. We're looking on this chart at the last quarter. This is the last 120 days. Let's draw this chart out 6 months. You can see that this high peak that we've been at in the last 3 months is still much lower than where we were in the time preceding that. That being said, it's very, very good to see things like this. But the reasons for why we're seeing this in early morning trading this morning, and again, this is very early morning trading, is that the Dow and S&P futures, NASDAQ futures, all way, way down. A lot of this going on with what's happening in China. Apple has fallen 5%. I mean, it's the stock market is starting to reel, and that's when we start to get the flight to quality, the money moving from stocks into bonds, and that boosts bond prices, and thus that will help interest rates. Now, it's, as I'm recording this morning, it is still too early for interest rate sheets to come out, but I would expect this morning we will see improved pricing based on what you've already seen run across the screen here. That has been based upon Friday's pricing, so just keep that in mind if you're trying to get an actual interest rate update this morning. And if you want to know where things are once the market finally opens, drop me an email or give me a call. All my information will be here at the end of the video, and we can talk about this. I want to talk about the economic calendar for this week because we do have a lot on the table this week. We don't have anything today, but tomorrow we're going to get into the Case-Shiller and Federal Housing Finance Agency's home appreciation looks. This is the housing price index and the 20 city price index for both of these. Case-Shiller is a private sector look at house prices. FHFA's is based on Fannie Mae and Freddie Mac, so the conforming mortgages out there and the house prices used for those. We'll also get new home sales, consumer confidence, durable orders, initial jobless claims, our second look at second quarter GDP, pending home sales, and then a very, very important coming up here at the end of the week read on personal income, personal spending, and the Fed's favored read on inflation, the PCE, or personal consumption expenditure. This is going to be the last PCE read the Fed will see prior to their next meeting here in the middle of next month, which is the one where all this talk about are they going to hike rates. Now, based upon everything that I am seeing right now, I know there's still going to be a lot of debate about, yeah, the Fed should hike or no, they shouldn't hike. We're going to be talking about this all the way up to it, but I cannot fathom at this point in time, based on what's going on globally and in China and with the inflation picture here in the U.S., that the Fed is going to have any chance of actually tightening. That doesn't mean there will not be some votes for it from the Fed, because I'm sure there will be, but I think this next upcoming meeting is going to be too early, and that things will then shift to December, which simply means we are going to be in a market where we're going to continue to have volatility based upon the expectations of what and when the Fed is going to do their next tightening cycle. So, as you can see, we're off to a very good start this morning, but we're off to this good start at the sake of the stock market. So if you're thinking right now about buying a home, locking in an interest rate, or even refinancing, take advantage of this improved pricing we're getting, because as I just showed you, this is the best pricing we have now seen heading into this morning in 3 months. So this is where we are heading into the week. I'll be back with you each day with new updates if I can help you at all. All my information is here at the end of the video. Thanks and have a great day.